This is John Paulamy of the Actionable Intelligence Alert. Today I want to continue my series of book reviews from some of the old masters, as I call them, guys that wrote books back in the 30s, 40s, and 50s that I feel are still applicable today. And this is one of the books that I recommend people get. It's available on Kindle. It's more of a pamphlet. It's not that long. Like I said, you can get it on Kindle. It's something you can read fairly quickly and that you can refer back to. And the name of the book is The Art of Contrary Thinking by Humphery Neil. It was written originally in 1954. And I find it, like when I was talking about the Thomas Phelps book that I reviewed a couple weeks ago, that a lot of these guys with their common sense, well thought out, and still relevant ideas are ignored today. There's really nothing new under the sun, as King Solomon said. Human nature and human psychology is basically the same throughout history. The circumstances may change, but what we have seen is basically the same psychology, the same biases, the same prejudices still apply. So I wanted to go over this few notes from the recent reading of it, or rereading of it. I've read it several times, and see how it's can be applied to contrary investing. So when I have quotations in these notes, that's direct quotations from the book. But one of the things Mr. Neil says is it pays to be contrary. And I put a beginning quote here from another guy that I like to follow. I consider another one of my virtual mentors, if you will. It's Rick Rule, billionaire natural resources investor. And he has a famous saying that many people repeat, and that is, you are either a contrarian or you are dead. And that's basically the way you make money in the natural resource and commodity business investing. You buy at the lows when everybody hates the sector that you're looking at, whether it's copper, gold, uranium, oil, and you sell at the top in the edges, at the states of euphoria, when everybody's in and it's all rainbows and unicorns. I mean, in the book, or Contrary Investing book, one of the things Mr. Neil quotes is another famous investor. I can't remember the guy's name off the top of my head, but they asked him how he got rich, and he said he bought hats, straw hats in January. It's the same thing. You buy coats in July, winter coats in July, and sell them. So it's common sense. It seems simple, but it's another one of those things, like I've talked about before, that it's easy to understand intellectually when I'm talking about it, but it's actually difficult to implement in your actual real life. So the art of contrary thinking can be summed up as thrust your thoughts out of the rut. In a word, be a nonconformist when using your mind. Okay? And one of the suggestions I make to you guys is go and listen to some of the Charlie Munger videos that are up about when he's interviewed, because he's asked quite a bit about his keys to success, and he talks about his thought process and how he constantly, even at his age, he has to constantly wrestle with allowing beliefs, prejudices, and preconceived notions to seep into his thinking. And if you're going to be a contrary thinker, if you're going to be a contrarian investor, you have to be able to constantly fight back. I mean, it's a constant battle to fight back against these types of thoughts. Okay, sameness of thinking is a natural attribute. Well, this is almost like evolutionary or instinctual in us. I mean, 10,000 years ago, we were running around in Europe chasing woolly mammoths around and fighting with the other tribe at some water hole, fighting over resources. So in order to survive, we had to stick together in these hunter-gatherer groups, and in order to take down these big animals and in order to garner enough resources. I mean, somebody that just was an individual lone wolf McQuade simply wasn't going to be able to fend off saber-toothed tigers and other tribes or other groups of proto-humans. But, you know, that is the way you survive, so that is the successful genetics that get passed on. So you see this thinking, or the most people are drawn into thinking the same, and they don't even realize it sometimes. When everyone thinks alike, everyone is likely to be wrong. This applies not only to investing and speculating, but it also applies to economics, politics, and social trends. And I will go over some times recently when the public was wrong. Okay, so let's go over some recent, because Mr. Humphrey, or Mr. The author of the book, goes over historical things like the South Seas bubble, the Florida land boom in the 1920s, but I wanted to go over some more recent events that a lot of you guys would be remembering. So let's talk about 1999 tech bubble. I mean, I was around for this, and I remember watching CNBC and watching the financial media and the valuations on some of these stocks. Now, in a previous video a couple months ago, I showed a video of, or a chart of JDS Uniphase, which is one of the darlings of the tech bubble. And it had its meteor shot. It went straight up and then came straight back down. And I remember the justifications that analysts and the media and other investors would put up to justify these valuations. I mean, at the time I was working at a refinery, and there were guys that I worked with that were in their late 50s and early 60s. Most of these guys had been working there 25 or 30 years. Quite a few of them had accumulated well into the few $1 million, and I was shocked that these guys were invested. I wouldn't call it investing. They had their money in a lot of these internet stocks or these tech stocks, and they were in the middle of this bubble, and I couldn't believe it. I was shocked. I was like, guys, you know, can't you see what's going on? I mean, pets.com, drcoop.com, I mean, and they were able to justify it in their mind when we would talk about this, and I was just shocked that they would have their money in that. And quite a few of them, unfortunately, when the tech bubble blew up, they lost 80 or 90%. Some of these guys actually wrote it all the way down and had the excuse or the view that it will come back. I mean, that was just to see $2 or $3 million just shrink to 150,000 or 200,000, your life's work. That's just shocking to me. And, you know, in retrospect, it seems obvious, but even then, when my mind wasn't trained like it is now, because you have to train your mind. You have to be objective. You have to fight against the mass psychology and the mass movement and the propaganda. I remember, you know, being on Yahoo message boards arguing with people about, hey, this stock like you're promoting that you think is going to, you know, continue to go up has no sales and no earnings and no cash flow, and its valuation, $1 billion valuation, is based on this is the actual valuation methodology they used back then, the number of eyeballs or clicks onto the website. It was crazy. And I remember I have a note here about this guy I wanted to talk about, Serge the Trader. They found this putz, I don't know, he was about 25 or 26, he had a shaved head, he was some dink they brought on. He was sitting in a bar, and he was supposedly trading all these internet stocks, and he had a martini in front of him. I mean, I wish I could find a clip of this dink, because it was hilarious. He's sitting there with a martini and a big cigar, and he takes he's talking about all the money he's making in internet stocks and how it's going on, and justifying all the valuations. And then he takes a big pull on the cigar and blows it into the camera. And I can remember with the snide look on his face, like I wanted to slap the living shit out of him, says, "This is the first time in the history of the world that people my age have had this kind of wealth, and you better get used to it." Well, I don't know where he's at now, but he's probably back, waiting tables at Chili's, or doing tape and float on drywall, whatever he was doing before he caught the wave. But those are those are those are indications, guys, of distortions in mass psychology and I mean, it seems obvious in retrospect, but when you're living in the middle of it, I mean, you will be surprised at the amount of people that get caught up in it. And I'll talk about it more here at the bottom when I talk about Bitcoin. The next one was the housing bubble. It was the same thing. The financial media, if you watch the movie The Big Short, I love that movie. I've probably watched it about 20 times. I watch it about probably a couple times a year. And I remember one of the main things during that is, housing prices have never went down since the last depression, and then the quote in there, like, who doesn't pay their mortgage? Well, we found out, didn't we? We found out what went on. It was another bubble, and the mass psychology again took over. I mean, who doesn't pay their mortgage? Well, a person without a job, that's who, or a illegal immigrant that you gave a $500,000 no income liar's loan. So, I mean, that's who doesn't pay their mortgage. So, another incident where mass psychology or the public got it wrong was 2016 in Brexit. I remember watching the Bloomberg or CNBC Europe or whatever, or BBC on cable, and they were, very confident, as the results were coming in that, this was going to get beat down, this little populism or this little pseudo-nationalism that was coming up. And the looks on the commentators and the experts, I say that in quotes, faces as the results came in and Brexit actually went through. It's just interesting watching these things. And I think one of the biggest ones that we've seen here in the U.S. in the last couple of years, I mean, the 2016 presidential election. Here you get a guy, Trump. Now, I knew something was stirring out there. I didn't actually think Trump was going to actually go all the way and be the president, but I knew something was stirring out there. I could get a sense of it. And here we got a guy that, with no political experience, beats a field of 17 political animals. I mean, true politicians. That's all they ever did in their life. He goes and beats all them against all the odds, and then goes and beats what the media and everybody else called Hillary Clinton the most qualified candidate to ever run for president. Now, I'm not saying he's a good president or a bad president. I'm just telling you that the psychology and the polls and the media and the propaganda organ got it wrong. And it was the same thing after that too. If you remember, after he got elected, people thought, during the election, when the election returns were coming in, the stock market futures were dropping. And then it was amazing. When he got elected, everything turned around and we had this big rally in the stock market, if you remember, all of last year, basically. So in the book, Art of Contrarian Investing, it's the same thing. Talks about, during World War II or prior to World War II, the stock market was suffering in the U.S. And then after the U.S. declared war on Japan and Germany, the stock market took off because, it was a contrary indicator again. I mean, if you actually sat down and did the math, you would understand that it didn't really matter if the Japanese and Germans were going to fight the U.S. It was just a matter of time once the industrial base, unfettered by being attacked by either adversary, was going to eventually be able to overwhelm in men and materials both adversaries. So, that understanding that at the time, I mean, people were scared. I mean, people were thinking that the Japanese were going to invade the west coast of the U.S. We were rounding up and interning Japanese people, Americans. I mean, it was a time of, again, mass hysteria and the mass psychology getting it wrong. And I think one of the most interesting recent, for a lot of you young guys, is the whole Bitcoin cryptocurrency bubble that we just went through. I mean, here we have a situation where every moron and his brother is out buying this, trying to get rich. Just about everybody I talk to, and I got calls left and right from people saying, what do you think about it? And I was like, well, have you read the white paper by, Satoshi Nakamoto or whoever this person was? It's not that long. No, what are you talking about, white paper? So you're in here buying something just because it's going up. You have no clue what it is. You don't understand the concept of blockchain. You don't understand the technology behind this. You don't understand money or currency. You're just in there. So again, it was interesting to watch the mass psychology takeover. Because what I found interesting, if you go back and look at Google Trends, and you can go on Google Trends and look this up, the time between November and December of last year, when people were gathering for the holidays, first Thanksgiving in December, that's when you saw the main interest in this thing take off. You saw the mass psychology, the hysteria, the bubble, the crowd, poured into this thing. And this thing took off and went to almost $20,000 of Bitcoin. And we saw articles, and I know of people that went out and ran up their credit cards buying this crap. And of course, I warned people in an article and a video I made, one of the first videos I made, to get the hell out of this, and especially if you don't know anything about it. And of course, a lot of people got burned, and they're going to be like those guys I was talking about in the tech bubble. They're going to hold on because it's going to come back. When a bubble bursts, it doesn't come back. It goes up, it crashes by 80 to 90%, and then it has a long period. It could be a decade or more before, if it is going to come back, it starts to come back. So these are just some recent examples of the mass hysteria, mass psychology, and especially in this internet age and this thing with Facebook and Twitter. You can see on Google Trends, when people started getting together for the holidays, they were talking about this. And you could see the interest level in the Google Trends for the searching of these terms went astronomical. And then, of course, it peaked and then dropped off. And you can pretty much overlay the price of Bitcoin on that. So I think one of the things to take away from this is that's a tool that you can use to gauge if something's actually a contrarian idea or not, because Google and these people are collecting this data. They make it available, so you can actually see if you put in there, uranium stocks, and it's flatlined. That's probably an indication that there's not a lot of interest. If you put in uranium stocks and it's up near the highest point on referencing, on this chart on Google Trends, and everybody's talking about it and everybody's getting into it, and your barber's telling you about it, or your Uber driver's asking you about it, because that's what we saw with Bitcoin. Every moron and his brother was getting into this thing, and that's an indication of the top. Now, I'm not going to say anything too much bad about Bitcoin, because I was in it a couple years ago, and I had a mining operation, and I sold it all. I'll tell you guys a story. I was building a wind farm last year, and the guys that were from the manufacturer of the wind turbine were on site, and there were a lot of young guys in their early 20s, and this is all they talked about. We'd go to a meeting to talk about the job site or about the turbine installation, and I'd have to get on these guys and tell them, "Well, you guys shut the hell up and stop talking about Ripple and Ethereum. I don't want to talk about this crap. Let's talk about this job." And when you start seeing that kind of stuff and you have the experience that I do, it's a bubble. So I sold all my Bitcoin. I kept my mining contracts going because they were already paid for. So it's just like an oil well that's already paid out. You might as well just extract every drop out of it. And I sold. I'll be honest, I sold at 2,200, and but I still made 5 times my money. Now, if I would have held on I still missed out on that 10 times up to 20,000. But I don't begrudge myself making 5 times my money. That's fine with me. Okay, so the crowd is wrong usually. So as the author says, at least in its timing of events. So the crowd isn't always wrong, but most of the time they are. So you have to be careful, and you have to be objective, and you have to train yourself to think. The majority of the time when the crowd does get involved in something, it is wrong, but in some cases they can be right. You're not going to hit it 100%, just like anything else in life. It's not for sure. When masses of people succumb to an idea, they often run off at a tangent because of their emotions. They think with their heart, not their brain. We've seen this before, guys. We've got the friend that gets hooked up with the bar whore and falls in love with her, and everybody's going, "Why are you marrying this person?" Or "Why are you getting involved with this outfit? I can see what's going to happen." And sure, the guy won't listen to anything because he's thinking with his heart or his member. We're not going to get into that, but we've seen this before, guys. Like I said, the art of contrary thinking can permeate all facets of life. And that's an example of thinking with your heart, not your brain. Or the fact where somebody has a good investment or good speculation, it goes up 3, 4, 500%. I've seen this happen before too, and they don't sell because they fall in love with the stock. It's up 500%. Instead of taking profits or understanding that, maybe the trend is over or beginning to end, they fall in love with it and they're thinking with their heart, not their brain. So therefore, you must train your mind to ruminate in directions opposite to general public opinions, but weigh your conclusions in the light of current events and current manifestations of human behavior. We're talking about here mass psychology, propaganda, fake news. If you're you have to be very careful about how you get your news and how you get information. In this modern age, we're getting bombarded with information, like I said. Social media, Twitter, Facebook, LinkedIn, regular cable news, all the stuff that we're seeing, YouTube. Anybody and his brother, as I'm doing right now, can just start making YouTube videos. So you have to be objective. You have to think, and you have to really put up barriers and not just let yourself get caught up in the general propaganda. You see that in the media today. I don't really care if you're a Trump supporter or not. It doesn't really matter. But you can see, it's an obvious thing that the media is biased against the president. No matter, nothing that he does, nothing that he says, nothing that happens is good. It's all bad all the time. And you have to guard yourself against that. When we had tax cuts, that's one of the reasons earnings are taken off. That's thinking objectively. What happens when we have tax cuts? Well, typically, the stock market can outperform, and I think that's going to lead to higher highs this year. When we bring $800 billion back from overseas, or $2 trillion back from overseas, and companies have said they're going to put $800 billion of it into stock buybacks, the stock market's probably going to go higher. So if you're some liberal Democrat that's investing money and you just hate Trump and everything he does, you may miss out on some gains. It's the same thing for these Republicans during the Obama administration. The Federal Reserve was pumping money and buying bonds and doing QE 1, 2, 3, and 4, or QE 1 through 3, and they were out there just buying all these mortgage securities. It didn't matter that his policies. There was so much liquidity, the stock market went up. When the stock market bottomed in 2008 at 666 or 667, it's up to, the S&P is up to 2,400 now. You missed out on a big gain if you hate Obama just because he's a liberal Democrat. You've got to train yourself to be objective. What are the things that drive these markets? What are the things that are going to apply to this particular investment or speculation? And let me be objective about it. You have to drive out your personal biases, prejudices, and preconceived notions. Otherwise, you cannot be a contrarian. You will not be successful being a contrarian. Or as Rick Rule said, you're either a contrarian or you're dead. So if you're not able to do that, you're going to have a tough time being successful in the market. So the last slide here, are you a contrarian or are you just being cynical? Because I know some people that are just, they want to take the other side of everything just for the sake of being an argument. They're a curmudgeon or a cynic, and you can't be that either. You can't just be a contrarian for the sake to be contrarian. You have to look at things, start out questioning. You have to start out by being objective about everything that you're looking at. But as John Maynard Keynes said, when somebody asked him why he changed his mind, he said, "When the facts change, I change my mind. What do you do, sir?" So you can't be wedded to an idea when facts are changing constantly or new information comes in just because you have a bias or you want it to be that way. They have a saying. I hope this doesn't offend anybody, but want in one hand and shit in the other. It doesn't matter what we want to happen. It only matters what is going to happen or what is happening. And this is a hard lesson that I had to learn myself. It's hard to break that thinking. And, I know people that have been hardcore gold bugs that think the economy is going to collapse for the last 40 years. And they have missed out on so much money, and they are very smart people. But they just have this idea that, the U.S. economy is going to collapse. The government is bad on everything it does. The Federal Reserve, the Bilderbergers, the Rothschilds, they give you the whole litany, okay? And that very well may be the case. I mean, I'm going to do another video about, public debt, private debt, Social Security and Medicare, how they're, unsustainable, but that's not going to happen in the next week or two. And so you have to be able to adjust on the fly. You have to be able to course correct. You have to be, if you're flying an airplane and you have a course that you need to fly, or a ship and you're on a course and you're driven off course by the wind or by the currents, you have to course correct and get back on course. You can't just stick to an idea or just allow yourself to be moved by these emotions or your personal biases. Get into the habit of thinking the opposite of the crowd, with the caveat of challenging your own thinking. Let's use uranium, for example. A lot of people have talked about this being one of the most asymmetric speculations out there, something with the most upside. I've heard all kinds of people say this is the best setup they've ever seen in their career. But you still have to sit down and think, what are the things that could go wrong? I mean, where is my thinking incorrect here? I mean, certainly if we were to have another Chernobyl or Fukushima incident, I mean, that's pretty much going to drive a stake in the heart of nuclear for a while. I mean, what else is out there in a general market decline? How will these things perform? I mean, that's just some of the things you need to be challenging your thoughts. You can't just say, well, I'm going to buy uranium, I'm going to buy any old stock, and I'm going to be a multimillionaire. Well, that's not really how it works. You have to constantly challenge your thinking, and when somebody comes up with a contrary view, you should at least listen to it and analyze it, not just, go, well, that guy doesn't know what he's talking about. I thought it was interesting, Michael Elkin has his podcast, and he, a couple podcasts ago, was talking about this exact issue about uranium. He had the opportunity to talk to a guy that runs money, I guess runs a hedge fund, or, has money under management, and the guy was short uranium. And he wanted to hear this guy's thesis and understand why this guy was short. Now, after a few, after an hour of talking to this guy, he realized that the guy was not informed all the way and did not understand what he was talking about. But he at least was open-minded enough, and he admitted it on his podcast, that I want to sit down and hear what this guy has to say, because it may challenge my own thinking, and I want to make sure my thinking's clear on this. I mean, we're talking about, the possibility of investing real money here and advising other people, and you want to make sure that you have considered all the variables and not be, like I said before, biased and having just a preconceived one-track mind on this. So that's an example right there of what we're talking about. And this next thing is something that I think I want to make sure I explain it because it's probably going to offend some people. MPAI, and this comes from a guy named Vox Day. He writes a blog, and it's pretty good. I've read this guy for about 15 years, and he challenges a lot of conventional wisdoms, and he does not really care if he offends you or you don't agree with him. But I like one of the things he says which is most people, MPAI, most people are idiots. And when we say idiots, we don't mean, I don't mean, everybody's an idiot and I look down on other people. But what I do see is people being idiotic in some of their decisions or their methodologies. And this tendency they have to their own demise or self-destruction just because, like I said before, they are wedded to some political viewpoint or economic viewpoint, like these gold bugs that have missed out on these huge rallies in the stock market or the bond market because they think the world's going to collapse, or these people that are, hate whatever president's in there just because of the fact that they're on the other team. And these people are not thinking objectively, and they are idiotic. They are idiots. They are idiots because they are shorting themselves of the full benefit of this life. And there's constantly opportunity, there's constant change. Things are never as bad as they seem, and things are never as good as they seem. And if you're just going to be one of these people that's going to be one-track mind on anything that you're thinking about and will not open your mind up to other viewpoints or at least challenge your own biases, then you are going to have a very unhappy life. And I do think that that's idiotic. So I just want to finish. I started this with a quote. I want to finish this with a quote. It's by Mark Twain. And he says, it ain't what you don't know that gets you into trouble. It's what you know for sure that ain't so. So, again, the name of the book is The Art of Contrary Thinking by Humphery Neil. I will put a link to it in the video comment section. And I definitely suggest, guys, that you take the opportunity to read this. Like I said, it's a short read, but I reference it many times. It's in two parts. The first part is just talking about the art of contrary thinking, talking about what's behind it, mass psychology, how to train your mind to be objective. And the second part goes into actual examples, which aren't as applicable today as they were when this book was written in the 50s. So it talks about the Great Depression, the 1920s Florida land bubble, stuff like that. So that's why I put those other examples up that are more timely. But definitely, this is another one of those, like Thomas Phelps's book, 100 to 1 in the stock market, where they're just forgotten. Nobody reads these anymore. No one pays attention to them. And they're just treasure troves of knowledge. And these guys, you know, it's interesting to read both the introductions or their initial thoughts in both books, where both guys is kind of, I really felt a kinship with them, because they were saying some of the things I say to you guys. They made a lot of mistakes early in their career that they wish they wouldn't have made, and they would have been a lot better off if they didn't, if they would have listened to some of the people that came before them, and some of that wisdom and some of those signposts that are out there from previous travelers. And that's what I'm trying to do here with some of you young bloods. I know the demographic that listens to these videos, and guys, I mean, take the opportunity. Just get this book and put it in your bathroom and read it when you're in there. I mean it's, or read it a little bit before you go to bed, because it'll open up your mind to really understand that you need to train yourself in these things. So that's the gist of this video. I hope you enjoyed it, and I'll be looking for some feedback. Thanks again for listening and supporting the channel, and we'll talk to you later. Thanks.